This is Innovation Connected, coming to you from the World Economic Forum in Davos, a podcast by Tenity.
Welcome my esteemed guests, Charif from Mubadala and Andreas from Stableton. Welcome and thanks for taking the time. Please make a short introduction about you and your role. Maybe Charif, if you could start.
Thank you for having me, Max. So my name is Charif Beainy. I'm the Portfolio Strategy Executive Director at Mubadala. What we do at Mubadala in this unit is to help our IC construct the portfolio to be able to manage to the targets that are set by the board.
Okay, thank you. Andreas.
Right, Max, thanks for having me as well. My name is Andreas Bezner and I'm the CEO, CIO and co-founder of Stableton. We are a fast-growing specialist asset manager in the growth equity and pre-IPO space, and we were the world's first to bring passive systematic investing to the growth equity space. And so that's what we do. So as a CEO, of course, leading the team and making sure that we are making investors happy.
Perfect, thank you. So is it the first time coming to the forum for you, Charif?
It is the first time. I'm very impressed.
Andreas?
Yes.
So, Didi, how was it so far? What was your first experiences?
It's actually not as cold as I was expecting, but extremely interesting people, very interesting talks. You really meet so many inspiring people, actually.
Yeah?
Very nice.
Do you have any expectations before coming?
Well, I hope I'm going to continue on meeting people like that, and I think it's a great learning experience.
Okay, thank you. Maybe we start a bit more going into your current role and how it changed. I mean, you are how many years at Mubadala?
I've been with Mubadala for a bit over 10 years now.
Yeah.
So I've only been the head of the strategy unit, for a little bit less than a year now. But the role essentially extended. So what we do is we help in constructing the portfolio, but we also help in figuring out how we organize as a company to be able to deliver on the mandate. Mm-hmm. Because one thing is just to say, I want to invest here and there, but then the way you organize and the way you build the processes around that is also important. I think from a portfolio construction perspective, over the past, I would say 10 years, and I think this is a little bit the sense of your question, Max, we're seeing a lot of our peers getting more and more into the private equity space, mm-hmm. or the alternative space.
Yeah.
And also a lot of people dabbling with anything around the crypto and the cryptocurrencies. So.
Yeah.
Yes.
But how did it change over the years? I mean, what would you say was it 10 years ago and how is it now? I mean, it's also in a lot of in the media, people talking about that, trying to get money from Mubadala. You're a very active investor, so is this something how that changed over the years?
I think Mubadala has grown a lot over the years. Yeah. I think Mubadala continues to be, a very active and international investor. I think the way that we invest. Where a lot of the investments that we do are direct investments. Mm-hmm. So we partner a lot with the GPs, a lot more today than maybe we were, a few years back, to be able to find the investments that we execute on.
Okay. Andreas, such investors are quite important, I guess, like sovereign wealth funds or bigger investors from the UAE. How do you see, the relevancy also for European fund managers to work with such investors?
I mean, I think like sovereign wealth funds are just great long-term allocators with a lot of money. I think the problem is for most of those investors that the amount of money is so much, so that likely the requirements for a investment project must be very, very large. But I think overall the role of sovereign wealth funds combining financial returns, business development, and driving innovation, I think that's a great role. I wished, let's say, the money wasn't as large to be spread likely to more underlying investment companies to make a real impact.
Yeah.
But of course, it's an important contributor to growth.
I think on this point, it's true that when you look at Mubadala overall, it's a very large institution with a lot of assets. But we also have a number of companies that are either themselves investors or asset managers, or in some cases even GPs. We have, for example, an initiative in Abu Dhabi that's called Hub 71 that does much smaller investors, and that encourages, smaller companies to come to Abu Dhabi, and does basically seed or Series A type investments with them there. There's also a big venture capital, if you want, ecosystem that was brought also from all around, just to be able to do these kind of investments that maybe from the Mubadala side directly do not necessarily make sense because of the size. And we have within Mubadala, for example, a team that does investments in the MENA region that are of smaller size. We call them MENA Ventures.
Yes, okay. I mean, Andreas, we can quickly explain what are you doing at the moment at Stableton, and also how you started doing that. I mean, you are an investor yourself. I think you covered already different topics in the investment space or from the categories. So maybe you can say something about that.
Right. So I've been basically the last 20 years in the growth equity hedge fund space. I've got a master's degree in economics, wrote my thesis about the secondary market for private equity in 2003, when it basically just started, basically LP interest on the secondary market. Then through various roles, being a transaction analyst, a portfolio manager of a technology closed-end fund, I found my own hedge fund firm, which I sold, and then I was advising investment managers, but equally allocators like wealth managers and family offices. And so that basically created the idea of Stableton, that more investors should be eligible or able to invest in growth equity or alternatives, because typically it has been reserved for very large institutional investors. So so that's basically what we do.
Maybe quick, growth equity, maybe explain quickly, maybe not everybody in the audience understands exactly what that is.
Yes. So growth equity is a kind of super late stage of venture capital, towards even like private equity. And these are typically very, very large private companies. So what we are doing specifically, we are investing in growth equity companies and pre-IPO. So these are the likes from SpaceX, Revolut, Databricks, etc. And but of course, as companies grow in size, they typically want to have very large investors, because they don't want to have endless people on the cap table. On the other hand, I think why that is an exciting space is that more and more value is created from these companies, because they are staying private for longer, and there is no other easy way to participate, because these companies do not necessarily go public soon, right? And what we do is we enable the wealth channel, banks, wealth managers, family offices, but also equally forward-thinking institutional investors to invest in these companies by leveraging the secondary market of these private company shares. And we do this in a very easy way, just similar like the NASDAQ 100, the basic index fund or ETF, so that we build a systematic portfolio that enables investments in all top 20 of these companies in one portfolio in an evergreen semi-liquid structure.
Like an ETF for private equity.
It's similar to that, consisting of the top 20 private technology companies that are the most valuable ones.
Probably Mubadala is directly invested in some of that.
Many.
So within our growth portfolio, I would suspect that there could be some companies that maybe, yes.
Yeah.
Possible.
I mean, does it play a part in the financial inclusion as well, Andreas? I mean, this is something usually where you have to have bigger tickets. I mean, what is the minimum investment size with you? Or in the market in general? I mean, private equity, in my understanding, is long-term holding, I don't know, 7+2, or depend how fund structures are. I mean, how is it with you, and why is it with you different to the others?
Right. So basically, we maybe have to start with kind of where the industry is, and basically the structures that are right now available for institutional structure that meet the requirements of institutional investors. They were invented 30 to 40 years ago, 10 to 12 year closed-end structures with capital calls, etc. But these do not work for, let's say, banks and wealth manager clients and family offices, because they need to have some kind of liquidity, and also the only way to participate is via funds, and typically these funds have very large minimums. So what we do is we provide specific investment products that cater to banks and wealth managers and to their underlying clients with low minimums and some liquidity, and hence we can contribute to financial inclusion and letting more people and more investors participate in that exciting market segment of the private markets space.
Okay. How is that in the UAE? Did you have experience already in that area or in the Middle East in general? And
I think
maybe
yes.
I think you can complement what he's thinking.
No, sure.
I think it's in Switzerland, Europe. It's very similar. There are a lot of large investors. I would say the upper end of the large investors is very much greater in the GCC countries with all the sovereign wealth funds. But I think also, in my view, the GCC region would also need to have some more democratization and inclusion of some other investors. But there have been great discussions with some larger banks that also have some initiatives to make that available to their underlying clients.
We have done through one of our subsidiaries something that's similar, I think, to what you are describing, whereby because of those minimum requirements and because in many cases those wealth management type clients are not necessarily able to wait for those 7 or 8 or 10 years, to get some money back. So one of our subsidiaries actually put together a bunch of LP stakes that they had started maturing altogether, and they basically created a product of which they sold like smaller stakes with much lower. One was super diversified because you had so many funds together, and two, that was starting to pay off, with DPI coming much quicker for much smaller amounts of investment.
We basically have normal institutional structures, and we directly invest in these private company shares, or in some case where we cannot directly enter the cap table of the target company, we also work with SPV stakes, and the big difference is compared to how traditional investors operate. They are primarily active in the primary funding rounds. We frequently transact in the secondary market and do 100 plus secondary transactions in these companies. But we hold them just as any other institutional investor.
It makes a lot of sense. So the thing that I was just describing is actually quite akin to what you just described. Yes.
Yeah, I mean, you have also done a bit more liquidity, I guess, and also. I mean, the liquidity is probably a big part, and also the market price is different to a primary round, right? Or not? Or what do you see on such transactions? I mean, these very big transactions like the SpaceX and Revoluts. What can you tell us about that?
Yeah, so these companies which we invest in, these are 10 billion plus companies, and the largest are a couple of $100 million billion US dollars. So these are large companies. So whenever they do funding rounds or rounds, it's either a company-sponsored secondary because the company is already profitable and they don't need money, but they enable liquidity for the investors, or the rounds are very large, like billions in the meantime. And so these are typically then funded by large institutional investors, sovereign wealth funds, etc. But then after that, that's when those investors set the price, and then after that there are secondary transactions where smaller investors, early investors can sell, and because they don't have the latest preferred shares, that means that their earlier shares, like employee common shares or early preferred shares, they often trade at a discount. However, in our view, it's a great bargain to buy into those because those companies are well in the money, so the waterfall doesn't matter too much, and then up in an IPO these shares will collapse. So basically on the secondary market we are able to buy those typically at a discount, or if they are the same price, then at least the company has matured already for a few months, if not half a year or so, and the company is much cheaper on a multiple basis.
Okay, so a more accurate pricing in the end compared to a round or a hype. Okay, maybe quick discuss a bit more about portfolios. I mean, maybe you can say something. What is the mandate from the government? I mean, it's government funded, Mubadala 100%.
So Mubadala is self-funded today. But the government of Abu Dhabi is the 100% owner of Mubadala.
Okay.
So there were points in time at which the shareholder gave us money, but today Mubadala is self-funded.
Okay.
Sorry, what was the second part of the question?
The mandate. So
the mandate,
so
yes,
what is,
excuse me.
because that is impact also on
Of
performance
course,
or
of course.
alternative development economy.
The mandate, Mubadala has lived through several phases. When it was created up front, it was essentially, we were used to be called Mubadala Development Company, and the mandate at the time was to diversify the economy of the UAE away from oil and gas. Obviously, as you know, Abu Dhabi is very heavy on oil and gas. But back in end 2017, beginning 2018, we merged with IPIC, which was another sovereign entity also owned by the government of Abu Dhabi. At this point in time, we basically doubled in size. And we recreated the mandate upon becoming an investment company, where, the whole way that we were thinking about our investments, not necessarily holding them for as long, not necessarily building companies from scratch the way we used to do, became a little bit of a new reality. And the mandate is for Mubadala, at the time at least, we're like really a direct investor, trying to have sustainable returns over time, also being an ethical investor and across all the asset classes. And more recently, 3 years ago now, we were joined by ADIC, the Abu Dhabi Investment Council. They operate an endowment model. It's slightly more liquid, slightly more diversified than what Mubadala originally did. And as a whole now we operate as a large group with, if you want, there's the endowment model, there's a direct, if you want, arm. We have created GPs. Our latest GP created is called MGX. It's focused on AI. We had Mubadala Capital before that. And within the direct arm, there is one platform that's solely focused on the UAE. That a lot of the assets that are there date also from our earlier development days. Some were added also along the way, but many were date from that time.
Is there then a focus on Abu Dhabi, or is it UAE in general?
The focus is on the UAE. There's obviously also quite a bit in Abu Dhabi.
Okay, good. Interesting. And does real estate also play a role in your portfolio, or is that...
We have real estate, but so we have real estate in different forms. We have real estate because it's an asset class that can be... we have real estate in Abu Dhabi.
Yes.
Okay. We have real estate that's more international, and there we own sometimes things indirect, or we own things through funds. And we have also done a little bit more recently, quite a bit of real estate credit, which is a very interesting asset class for us.
Okay. Are you also working together with other investors, or is it like you are always the leading one, or how?
I'm happy you asked this question, because Mubadala means exchange, and partnership is really a bit our bread and butter, or it's in our blood. We practically always work with partners to do investments.
Okay.
And as of today, Mubadala is a significant minority type investor. We don't do many majority deals.
Okay. So you have long-term partners, they come with deals,
Exactly.
They propose them. And
we can also sometimes propose deals, we co-underwrite, we co-invest.
Okay. How is that with you, Andreas? I mean, it sounded also the B2B2C approach as well, that you're also, let's say, working together with the classic banks, family offices, and support them in these strategy executions.
Right, it's kind of a, let's say, similar model, different scale, and but no, that's actually what we do. We basically try to be the world's best secondary player that enables banks, wealth managers to offer that to their clients. So our intent is not to directly distribute to the end client, it's rather to build great investable solutions that our partners can use to enable either themselves, their family offices or institutional investors, or banks and wealth managers to include that as a tool in their normal portfolio, being that discretionary portfolios or with the advisory clients with their end clients, and thus it must be not only institutional quality because that's what they want to have, but also it must fit their end clients' goals, including liquidity, transparency, low fees, and it just must work in their context.
I mean, okay, now when we talked a bit before about that and also doing this podcast here, I was quite impressed. What is your vision in the company? Maybe you can say something, and that has a bit to do with your history about that. Yeah, how the change in the investment space happened, and what's your opinion about that? And I think that's
So the idea of Stableton is already originated basically in 2000 when I was an intern at Merrill Lynch, and all the investment products in the portfolio of like the greatest investment bank at that time were actively managed funds. And over the last 20 years, it has been completely disrupted by quant index funds, systematic funds. And so that took 20 years. Now, let's say Bitcoin went in, let's say, 10 years from geeks to mainstream. And now I believe that the next phase of disruption is also in private markets. It will not work for every single space within private markets, but the growth equity, yes. So what it means is we purposely do not charge a performance fee. It's based on a systematic index-based strategy where we basically just allow an investor to easily capture the exposure of that asset class, so let them participate into the top companies, just similar to how index funds disrupted public markets, right? And that way we're solving a lot of problems. Removing structures, making that easier to understand, easier to value, easier to subscribe, redeem.
Is this your index, or how is how do you get the information for that?
So we designed that together with Morningstar Indexes, and Morningstar Indexes came out and created a private market index that resembles the top 20 privately held unicorns. And what we are doing is we are basically replicating the universe and those companies by executing secondary market transactions. So if someone invests in those products, they can basically invest in all 20 companies all the time, today and in the future.
Okay. And how do they get the data from Morningstar? I mean, this is privately held companies. How can...
So that's a great point, as you earlier asked. So there's so much momentum happening in private markets. Companies are staying private for longer. There's more liquidity through secondary players, and there are so many transactions. But there are also new data providers and technology providers emerging, and these data providers aggregate from all the different market participants the trade data of those transactions that are happening, and we are using those prices to value the portfolio on a mark-to-market basis. Historically, basically the LP stakes have been maybe I don't know, half a year or every year, because the composition of those investors did not change, and we're really bringing this to a next level. It's not as liquid as ETFs, of course, but I think we're going in that direction in private markets as well.
Okay, it's interesting. Okay, I think that's probably, let's see what I saw in the Middle East. I saw a lot of, let's say, real estate investment, and now venture is also a big topic when you cover the whole one. But I think that that's something which could be very interesting for that region too, because there's a lot of retail investors which are not really catered yet. At least is that what we saw. Or how would you see that?
I think the private market, from a retail perspective, I don't think it's necessarily well catered anywhere in the world today, and I think the effort you're putting together is helpful. I don't think the Middle East is particularly different. I think what's different in the Middle East compared to the areas where maybe private markets are more mature is you have less transactions, you have less funds, etc. in the Middle East. So whenever you want to do something, get exposure at scale, you definitely need to look a little bit outside. I think that's a big delta.
But it's also been changing now. The capital of the capital is the name of Abu Dhabi. I mean, it's impressive the changes that happen over the last years.
It is. We are attracting a lot of. I think you were mentioning hedge funds before. We are attracting a lot of asset managers into a DGM, so Abu Dhabi Global Markets, and from different types of asset managers. Hedge funds, obviously more on the liquid side of things. I think at Hub 51. Hub 71, excuse me, there's about 50 or more VCs now. But we're constantly seeing, and I invite you actually to go to Abu Dhabi Finance Week one day when you can.
Yes.
It's really crazy. But we're constantly seeing inflows of asset managers setting up shop in Abu Dhabi.
Yeah, it's also quite impressive. The legal structure is quite in favor for that. Also the law set up, I think, is...
I think one thing that's very clear is, the leadership is quite enlightened and mature in all of these things. So they've put together what needed to be there to be able to attract talent and attract managers.
Yeah, it's definitely what I can also underwrite. We've been there 4 times, and just getting feedback and talking to investors and potential partners. And I think what's really impressive is the global ambition and the vision, but especially also the execution, that everything is put in place that is really in favor of people that want to come to the region. And I think execution is great, not like also bringing like top talent into the region to run those strategy, but together with people from Abu Dhabi themselves. So I think, and that knowledge transfer is really fascinating. So I can definitely see a great future of the UAE.
Come.
Yeah, I mean, maybe coming back to the AI part. I mean, there's so much investment now going into AI. Is it in the UAE? Is it in Saudi? Isn't there's a huge competition as well? Isn't that?
I don't know about competition. I can't really comment on that. What is clear is there is a lot of investment in AI. I think worldwide.
Yes.
The UAE has always been, from at least in my modest experience so far, has always been really at the edge of the innovation. Trying to push the boundaries in many ways, and more specifically, Mubadala. I mean, we were investing in semiconductors at times where semiconductors were, not really the most favorite industry.
Yes.
Global Foundries. We IPO'd a few years back. Now one of the largest semiconductor company. Masdar in renewable energy. Way before this, very large green wave that we've seen probably, 6 or 7 years ago. Masdar predates that, and now it's AI.
So talking about AI, how does AI change your daily work or the work at Mubadala?
I think AI is changing our work and is probably going to continue changing our work. It's difficult to really pinpoint when it started and where it's going to stop. We really see AI along two big angles. There's a little bit of what everybody's gotten used to, the productivity, the ChatGPT summarizing, etc. Obviously, we started quite early, actually, installing Copilot and the more obvious things. But now we're also thinking on how to use AI for the investment side of things. How do you replicate what maybe you or maybe other investors think, to be able to either find deals, due diligence deals, or even give you an opinion on the deals. And I think it's in the press, but now Mubadala has recently launched what we call basically an AI intelligence that helps our IC members thinking through deals.
Okay, so they
can ask the AI
friend what you consider two specific topics.
You can ask it a bunch of things. You can ask it to summarize something. You can ask it to give you an opinion. Do SWOT analysis. There's a whole
Impressive. Yeah. And Andreas, you have also such an AI. You can ask that.
We have
how you use AI in your company, in your processes.
We are heavily using it across all the processes. However, I would say secondary transactions, where we are specifically working on, that's still manual, but we are heavily using data collection, and just general workflows to improve everything. But I think like a lot of you just have to embrace it and just start it. It gets quicker better so fast. So you just have to start and continue to adapt. But it also creates great investment opportunities, AI specifically.
Yeah. Okay. Perfect. Thank you very much. So, anything you would like to add on private markets and how private markets will develop in the future, Andreas?
I think it will continue to increase extremely fast. So private markets growth have been much faster than, let's say, public market growth. I think that's going to continue, especially in the light of that, as I mentioned, more value is created in private markets and less companies go public. Second, I would say at least 50-60% of the global wealth is not yet allocating to private markets because it's not easily possible. So the whole wealth channel. And I think it's going to be much more data-driven. Mm. It's going to be more accessible. It's going to be more liquid. It's going to be lower cost. And just similar to public markets, you still have the same, long-term returns in public markets, driven by, companies' earnings. Yeah. Effectively, and now basically, but the cost to actually participate has been significantly decreasing. So I would say removing the different pain points, including the liquidity and lowering the costs, etc., will even drive more growth to the private market space and make that even a more exciting asset class. And I think in the next 2, 3, 4 years, there will not be so much differentiation between public and private anymore. Basically, people will just look at an investment, and regardless of if it's private or public, will more look at it from a risk-adjusted return, because they are just more accessible. So I think it will converge even more over the next few years.
Yeah, in our case, I think we see private markets as something that allows us to create a little bit of alpha. To be able to get the returns that we want to have in the long term. It's difficult to create them without that illiquidity premium and what you find in the private markets. What we're seeing also is there has been a lot of GPs created over the last years. Given the way the markets and interest rates have been, recently, and performance being not necessarily at the same level for every single GP, this will create a lot more secondary opportunities, I think. But at the same time, will drive maybe more consolidation towards the top GPs in the future versus what we have seen in the past. So I don't know if private markets will be entirely democratized, as you're pointing out. I think they will most probably be also a source of alpha, but for probably also specific types of investors. I think it's probably going to be a little bit of both. I don't think it's going to be very clean cut, completely democratized.
No, 100% agree. If especially in the private market space, there are so many different angles and specializations of different investors that focus on different segments, and like super early stage requires completely different skills, so to be active. But I'm more referring to more the blue chip investments, kind of where it's hard to beat the 20% performance fee. That's more where you have, let's say, more democratization, where it's makes likely more sense to invest in lower cost alternatives. However, there are so many specialty segments that's going to be really difficult to completely democratize.
Okay. So thank you very much for having you, and I wish you a very nice forum and inspiring conversations and also a bit of sleep.
Thank you very much.
Thank you very much. Thank you very much. Thank you.